What's going on, guys? We're going to do a stock market recap. My name is D. Anthony with Evolution Traders, and here is where we talk technical analysis, helping you understand the process so that you can be one of the top 10% traders and not the rest of the 90% traders that fail and lose money. I believe that if we understand the technicals and we play inside the lines, that we can be consistent traders. So with that being said, we're going to take an overview look of some of the stocks that I like to trade personally. If you guys would ever like to see any other stocks that I do not talk about, please feel free to leave a comment down in the description box, or excuse me, down in the comment box below. All of my information and things that I offer can be found in the description box. You guys can see that there. So what I'm going to start off by doing is looking at Apple, okay? And all of the time frames that I'm going to be looking at is going to be the 1 week chart. So each individual candlestick is going to be 1 week's worth of data. I believe that's going to be good going forward for Fridays to kind of do a recap video on the weekly time frame, so we can kind of see where we sit, where we could be headed going into next week, so we kind of have an overview, a realistic outlook, so we can be better prepared to try to make some money. So obviously we know that, you know, this is a bear market. We did get a nice little rally this week. There was some money to be made on the long side, and today was a very aggressive downturn. So, you know, is that going to happen where we kind of get these aggressive rallies and then we get rug pulled? Absolutely. In a bear market, you're going to get aggressive bounces. And until the stock and the index gets over its 50-day moving average, the market will continue to do this. So does this mean that we're going to go back down, make new lows? You know, I don't know. But what we have is the technical analysis charts that are in front of us to better help us prepare for that. So what I'm going to look at here is starting with Apple. Apple quickly regained its 5-day moving average on the weekly time frame, which was bullish. Very, very bullish, coming off of this bottom demand zone here, where you can see 2 weeks ago we kind of touched and tagged the 100 EMA as well as the 100 SMA here. Kind of tagged that. Last week we had a nice little bounce. This week we tried to confirm these highs here and push higher, but we did get rejected at around the 50 EMA. So when we got rejected at this 50 EMA, we never got a chance to really start testing the 50 SMA. I think that for Apple, if we do want to see any sort of significant change in trend from the selling, we're going to really need to get over $160. It's pretty cut and dry. Everything under $160, consider it just a rally, a dead cat bounce, get in where you fit in, make some money, so forth and so forth. Now, obviously, if you're a longer term investor, your outlook is going to be a little bit different. You do not want to be buying the dip each and every single day, but you would like to buy the dip at significant levels of demand. So for example, coming off of these highs of $182, the first area where you would have wanted to start dollar cost averaging would have been around 160 to 165. Okay. The next area that you want to dollar cost average is down here at around 150 to 153. Okay. The next area where you want a dollar cost average was down here at around that 136, 137. That's a true dollar cost average at every significant level. Now, let's say this bear market spans out for another 6 months and we continue to go lower. The next area to really dollar cost average would be at 114. I don't know if we get there, but this would be your significant level to start dollar cost averaging once again. You know, I really think we're looking at more upside where you can kind of tone down that dollar cost averaging when we get back over 160. But if we just kind of look at next week going forward, Apple loses 144.28. It will come down and test 141, if not 140 next week. That's what we have to look at on Apple. Let's take a look at Tesla really quickly here. Same thing with Tesla. We're going to be looking at the 1 week time frame. Tesla also did reconfirm briefly the 5-day moving average, which would have been bullish. Stock price over 795, 800 on Tesla did have room all the way up to 839 and 873. So there was some potential for a big upside on Tesla. Now that we've lost this 5-day moving average on the weekly time frame with no support lower, it looks like if Tesla confirms next week, it does have room down to 660. Anything below 660 will take it down to at least attempt to test the area of 618 to 620. Okay, anything below 618 would be a macro flush. You have no macro support on Tesla on the weekly time frame until you get around the $500 area. I know a lot of people do not want to hear that. I'm not saying that that's going to happen. Tesla could reclaim next week around the 715 area. That does push it back into 754. Again, I love Tesla over 754 short term for a push into the 800. Anything below 754 on Tesla, I do not like. Momentum is to the downside. Let's take a look at the S&P 500, which is the SPY. Let me take off some of these intraday marks that I have on here. The SPY, same kind of story. Last week, reclaiming the 5-day moving average, making a push up into this channel area of around 421. SPY gets over 421. It definitely does have room to 427 and 430. That was the major area key zone that I was looking for Tesla to try to at least attempt this week, was that 420 zone. We got pretty damn close to testing that before getting rejected and rolling over. Now SPY still does have support at 405. So anything above 405 is still technically, on a technical analysis chart, is still okay. We could come down, retest the 405 area, continue to chop around, and bounce back up to the upside. Again, keep in mind that 421 is definitely going to be your line in the sand to the top side. However, if the S&P 500 does lose 405, your next support is 394, and anything below 394 is a macro flush to come down here and potentially test 380 and 370. So if we kind of look at this from a little bit of a broader perspective, and I zoom out a little bit, coming off of these highs of around $480, we did get our initial washout to 420. We got our initial bounce that was into 461, and then this is our second leg down on the weekly time frame. So if you believe that corrections come in threes, which is back tested over time and time again, normally big corrections and bear markets come in waves of threes. If this technically is the first wave down followed by the bounce, and this is the second wave down followed by a bounce, we could be looking at a couple of more weeks in between this 430 and 400 area before it washes out into 370, 380, 371. So it's still yet to be determined. Again, momentum and the shift does not change on the S&P 500 until it gets back over 427. And what I would really like to see over 440. I think over 440, I think that was going to be telling us that obviously the bear market is over and we are going to start the road to recovery. Anything below 442 is definitely just dead cat bounce rallies that we have to be, aware of, so we can take advantage to the upside when they present themselves, because there is money to be made during that time. But we also have to understand that one day the rug can be pulled and you can give back a lot of gains. Let's go ahead and quickly take a look at Amazon. So Amazon, we do know, has that split approaching soon. Amazon had 2 really good weeks off of the bottom here. What I am looking at on Amazon is still over its 5-day moving average. However, Amazon is trapped under a very significant level of supply, which is a 200-day simple moving average. That price is sitting at around 2540. Over 2540 definitely has room to stretch into the 26 and 2700, but until Amazon can get over the 2540, it is just a dead cat rally. We need to make sure that we're taking profits on the way up for the possible rejection spot here. Now, Amazon, because it's a weekly time frame and it has such a wide range, technically on paper, 2291 is the flush point on Amazon. So again, that's 200 points away. But if you trade Amazon, you know that it can move 50, 100 points in a day. So this is realistically 1 week's worth of price action if Amazon really wants to get going. Its macro flush point would be anything below 2,000. If we take a look at Facebook, Facebook is another stock that has been getting hammered just like everything else for a very long time, coming off of highs of $384. Facebook is also below its 5-day moving average on the weekly time frame, and something to kind of keep in mind that Facebook really can't get going until it gets over the price of 202. If Facebook can get over 202, that's when it's going to really have room to stretch for a little bit of a rally into 220. Anything under that is going to be very, very choppy action. You will get your green days, you will get your red days, but overall the macro picture is still momentum to the downside. Your macro flush on the weekly basis is through 185, and 185 has room to 175 and 168. Okay, if we kind of take a look at Microsoft. So Microsoft is over its weekly 5-day moving average. However, it was rejected at the 10-day. The 10-day right now currently is sitting at around $277. Over 277 does have room to stretch into 284. That's going to be your next macro trade to the long side. Make sure you're taking profits into that 20-day moving average, which is around 284. That way you do not get trapped in that. And realistically, Microsoft is going to need to lose 266, and then your next support would be 263 as well as 255. Anything below 260 actually in the 255 zone is going to be very, very choppy. So 260 to 255 will be choppy. I would kind of stay tight for that. Your macro flush point is not all the way until 253, so you do have some, room to play with there. Let's take a look at an oil stock. We're going to look at XOM, XOM, which is Exxon Mobil. Pushing highs here at $99.78. This has been on a power trending move along with a lot of other energy stocks. So if you kind of go back to this December 2021 and January 2022, you can see that right around the time big tech and mega cap stocks started to take a decline, energy and oil stocks started to rise. So if you're kind of wondering, where big money flowed, where the outflow was going along the time that we are declining, it was into energy stocks. From that weekly breakout, price was $64 and the current price is $99. So this is a fantastic move here. Just understand that when the rotation does come back around and big tech does get out of this bear market, these will fall and they will fall again. The macro flush point on XOM is going to be through $82. $82 is going to be the big move down, but you will have room along the way, 93 to 89, 89 to 84, and 84 to 82. Keep that in mind, because just because your stocks that you're trading are going lower does not mean that everything else in the market is. If you are a long trader, meaning you prefer to trade long bias, and you have a difficulty shorting stocks, look at the energy stocks, look at the oil stocks, the gas stocks. Those are the stocks you're going to want to focus on. Those stocks are power trending on their weekly time frames, riding over the 5 and 10-day moving averages. Those are the stocks that, yes, they're going to have a little bit of down days, maybe even some down weeks, but overall the trend is pushing higher and they're on full on breakout mode. Okay. Let's take a look at just a couple more, and I'm just going to pull a couple of random stocks from the NASDAQ 100. A few stocks that people like to trade. We'll take a look at PayPal. We'll take a look at semis. So let's take a look at Nvda. Nvda highs of 346, also barely hanging on to its 5-day moving average on a weekly time frame. So for me, as the momentum comes down here, the bigger trade for me is a loss of 181.34 on Nvda. When and if that happens, 181 is definitely going to have room down all the way back down here to 162. This is going to be a macro trade for me. Something like this I would let run. I would manage it tightly, but anything below the weekly 5-day moving average, 181, I will let that ride short. In order for Nvda to really turn around and get going, it's going to really need to get back over 200. Nvda to the long side, as far as a swing trade, does not interest me. Maybe intraday, if we have a green day and everything is kind of trending higher, I will take a stab at it for a scalp. But from a macro perspective, my momentum is down, and I would like to ride that down. However, in order for me to really get bullish on Nvda for the short term, is going to need to get over 200 into 215 and over 215 to 233. I'm going to quickly take a look at AMD, which is another semiconductor. Now, AMD relatively has been holding up very, very strong. It's been presenting more long opportunity trades than a lot of the other stocks in the NASDAQ. So currently right now, AMD is still over all of its short-term moving averages, the 5, 10, and 20. We did get a little rejected today. Understand that we do have a major macro weekly supply level at around 113. 113 is going to be the 50-day moving average here. Over 113 is where this thing's going to really skyrocket. That would also tell me that the market is trying to make a recovery out of this bear market, is over 113. AMD and the semis might be the first to kind of lead us out. So definitely kind of look to AMD as an indicator that, hey, you know what, AMD has reclaimed its weekly 50-day moving average, and look for stocks that are coming off of the bottom to do the same. Okay, so as this AMD starts to reclaim its 50-day moving average, that's when you're going to want to look at the stocks that are really been beaten up and catch the ones that are barely coming off of the floor. So if we kind of go back 1, 2, 3, 4 weeks here, which is a month worth of data, when we got that big volume in the big green candle on the weekly time frame, and now we've kind of just been trading higher, that's what you're going to kind of want to look for on other stocks when AMD gets over the 50. When AMD gets over the 50, you're going to want to look for stocks coming out of a weekly breakout like this, taking out and engulfing at least a couple of weeks of price action to kind of get in on those stocks from the ground versus trying to chase AMD when it's already in the middle of its move. Now, do not get me wrong, over 113.31 is going to present a fantastic trading opportunity, but anything now on AMD between 102 and around 110 is very, very tough, just due to the fact that if we do pull back, you are going to go into the drawdown. So, kind of be cautious as we're approaching the middle of the range. Guys, I hope this kind of recap video gives you a good perspective on how I'm looking at the markets. If you guys are looking to learn how to trade technical analysis, day trade, scalp options, so forth and so forth, join my Discord and definitely check all the information that I offer down in the description of this YouTube video. Join the Discord, that's down there. Everything's down there. I hope you guys all enjoy a weekend. Get your eyes off of the charts, relax, enjoy yourself, exercise, get out in the sun, spend time with friends and family. It's not always about just the charts. You need to enjoy life. The reason why we do trade is to have the freedom of time, not to be enslaved to the charts. Definitely do your homework on Sunday, but for the rest of that, kind of enjoy your weekend, and I'll see you guys all later.